Okay, so what kind of situation do we have at the moment on GBP, JPY? Now, from a weekly perspective, clearly the market did create this beautiful impulse to the downside, followed by this retracement. And what do you expect? You expect the next impulse to the downside at least to start. That is how the pattern works. Now, if you want informations on this retracement, what are you supposed to be doing? Taking your Fibonacci from the high to the low of the impulse. And what we can see that the market first rejected the 50% Fibonacci retracement, then broke above it, broke back below, and went for a retest of it, confirming the fake breakout. And after that, you definitely expect a deeper rejection. Now, from a daily perspective, what happened? Now, from a daily perspective, everything happened in a very textbook manner. The market went exactly for the retest of this structure, which is basically the level at which you wanted to see the market create this head and shoulders. So the market exactly did what we wanted to see. Plus, not only the market went for a retest of the exact previous support, turn resistance, and right shoulder area, but it also did it creating this W formation. So again, more confirmation, and from here there was definitely a possibility to be looking for possible short positions, at least to the neckline, but as we know from the weekly, even lower. Now, from a daily perspective, let's continue with our analysis. We know that here there is the neckline of the W formation, and the neckline at the moment seems to be breaking to the downside, but we still don't know if this daily candle will close below the area or if it will actually close green back above it. So what does it mean? It means that this area, until we see a daily close below it, is still acting as support. Now, if we go and see what is the situation from a COT perspective. So basically what hedge funds are doing at the moment on the GBP and what they're doing from a JPY perspective. Let's go and see what kind of data we have. So from a GBP perspective, what do we have? So on the GBP, what we can clearly see is that with the last report, we have another 7.2k shorts positions added, bringing net positions from 35k positive to minus 6.6k negative. So basically, definitely net positions decreasing for the pound, so we can expect some pound weakness. From a JPY perspective, everything is happening exactly as you expect during an economic crisis. In fact, money has been flowing to the JPY with another plus 6.2k longs added with the last report, so a massive amount of longs added with the last report on the JPY, which is exactly what you expect, money to be flowing to safe havens like the JPY during an economic crisis, and JPY pairs making a move to the downside. Going basically back to our GBP chart, what kind of situation we have and how we can be approaching it. Now, the way in which we have to approach it is very simple, as a reactive way, as usual. So first, we have to wait to see a daily close below the area. If the market will actually have a daily close below this structure, then what we will be doing with students is monitoring price action inside of this area, waiting for the market to provide to us one of our valid entries on the retest of the new formed resistance. And if the market will provide to us one of our valid entries, then we will be taking a nice short with a very good risk to reward and very good probabilities down to this demand area. Now, if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you, and I will see you in the next video.